so in love with you.
Welcome back to Real Estate Mindset. Today's video is going to be absolutely bonkers. It's on the skyrocketing interest rates and the massive amounts of price cuts that I'm seeing. So what we're going to do today, guys, is we're going to first look at the new Fed economic data showing what the average interest rate is across the nation. And then I'm going to jump into my MLS and I'm going to continue to show you guys price cuts and the fact that I can find listings now for well under $120. And then we're going to end taking a look at the Treasury bond yields just to see if we're going to have another inversion with the 2 and the 10. The 3 and the 5 are already inverted yet again, and the 10-year is well over 3%. If you guys can, please, for the YouTuber in me to help push this message, like this video, comment, subscribe, and hit notifications. You guys know I'm not a financial advisor. My bio is, though, as a realtor, loan officer, and educator in Texas. And real quick, guys, before I really jump into this video, I really want to thank all of my subscribers, our entire community here at Real Estate Mindset. You guys have no idea how humbled I am by the growth, the love, and the engagement on my channel. I'm just a normal person, so I am blown away by the love. And a big shout out to Brian. One of my subscribers flew in from Washington. He met with me today. We went over like real estate stuff, a little bit of loan stuff, but overall it was just a really cool to meet one of my subscribers in person. You have no idea, guys. I am so humbled. Thank you from the bottom of my heart. But regardless, you guys, we're going to jump into the Fed economic data now. You guys know I wait till Thursday, so the graph updates once every Thursday. Now, you remember last week, I suspected that interest rates were going to start surging once again. Last week, I estimated that rates would go up 15 to 25 basis points, right? In just 1 week, right? That's what I estimated. Let's see if I was wrong, if I was right, and see how far I was off. Take a look at this graph right now. Okay, guys, so the new 30-year fixed rate was 5.23. It is now 5.7. It's 5.78, guys. You guys, it went way higher. So I thought, we were down here 5.23. I thought maybe it would get close to 5.5 on an average. It went over 5.5 to 5.78. So just real quick, I'm trying to be conservative with my doom and gloom, right? So I thought it would surge. I wanted to be a little conservative. This is a massive week over week surge. Let's go back to the graph. I want to show you guys. So from this hike to this hike, okay, that's a difference of 55 basis points. So when it almost doubled to what I thought it would go to, guys, to 55 basis points, which means in 1 week, 5.5% of purchasing power in just 1 week is gone. Remember that. So 5.5% purchasing power is gone. Now remember, January 6th of this year, which is right here, we were at 3.22. So it went from 3.22 to 5.78. That's 256 basis points to start the year, which basically amounts to over 25% of purchasing power has been completely rug pulled from the start of this year. So right here, you guys, you see the plateau. Okay, this is that plateau I was telling you guys about right here. And then, a little bit went down a little bit here, and then boom, surged, and it surged here. And honestly, guys, what I believe is going to happen, I think we're going to see 2-3 more weeks of additional surges. I don't think it's going to surge 50 basis points each week coming up. It could. That would really surprise me, though. I suspect when the new national average comes out next week, it's probably going to be over 6%. So I can see this next difference being 30 basis points to 50 basis points from next week. So I am guessing, I was wrong before. It's actually double what I thought it was before, even though the pattern is there. I'm really predicting the trend, right? And I'm trying to guess the number, but I'm projecting the trend. The trend is going to probably continue, probably plateau maybe at the end of July, and probably going to pick up again in September when they double their asset selling program, when the Federal Reserve doubles their asset selling program, which happens in September. So I'm saying next week, week after that, you're probably going to start seeing skyrocketing interest rates again. Next week, we'll probably see an increase of 30 to 50 basis points. That's my prediction. But what I want you guys to do now is I'm going to hop you guys onto my local MLS, and we're going to take a look at my local market. Now, I'm sticking with Kingwood just to show you guys the pattern. Last week, I was able to find several homes of under $120 a square foot, and I actually had some weirdo subscribers go in on my comment section with all this hate saying, oh, you can't do that. They're old houses, blah, 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 blah. But the fact of the matter is, I've been looking at whole old houses this entire time. Kingwood is not a new city. There's going to be old houses all over the place. And here's the thing, 2 months ago, 3 months ago, I couldn't even find old houses at $120 a square foot. So all of those people, calm down. I'm not lying. I'm showing you the data. It really is really surprising how passionate people are. Like they think I'm trying to trick you or something. What do I have to gain from that, right? It's all I'm saying, you guys, is changing, and it's changing quickly. And I want to show you that on my local MLS right now. Okay, guys, so here's my local MLS. Here's Houston. You guys know I like to go north of Houston, south of New Caney to Kingwood, which is right here. Okay, so here's what we've been looking at. Now, I can go to different markets very easily, but I'm sticking with one market so my subs basically just see trends that I'm finding. Okay, so let's start with this listing right here at 269,900. And let's see what I was able to find. Now, first of all, this is 1 day on the market. And look at this once again, $118 a square foot. That is under $120 a square foot. Now, and guys, again, if you've been watching my updates, I could not find $120 a square foot anywhere. New, old, good house, bad house. It was not available. Let me show you what else I was able to find. So this is just on the market under $120 a square foot. There's another option. Okay, here's another one right here at 315. Let's take a look at this 315. So the 315's been on the market for 1 day, and look at $123 a square foot. It's getting closer, right? People are listing for more reasonable prices. Okay, let's look at this other listing right here for 280. Okay, so this has been on the market, y'all, for 6 days. And look at this, $113 a square foot. You see that? 6 days on the market, $113 a square foot. Do you guys see my local market changing? Let's see if I can find another. All right, let's look at this listing right here, guys. Okay, so look at this, $112.86 a square foot, $112 a square foot. Also super amazing. I'm so loving this, guys. I'm finding under $120 a square foot all over the place. Let's take a look back at the map. Let me see if I can show you guys a price cut real quick right here. So let's look at this. Take a look at this house, all right? This has been on the market for 91 days. Look at this price cut. So it was listed at 310. It's now listed at 283, which means we had a price cut of $27,000. It has been stagnating on the market for 91 days. And this is what you're going to see, guys. You're going to start seeing this DOM right here, days on market, start increasing, and the houses are going to start sitting on the market. When that happens, you're going to start seeing a lot of listings with this right here, which means price drops. So you're going to see a lot more of that moving into 2022. But you guys, that's just a little bit on my local MLS. As you can see, I'm finding all kinds of stuff under 120. So now my new goal is I want to show you things at under $110 a square foot. I've only been able to find one house in this whole time under $110 a square foot. It was that one I went to go look at. That was a complete disaster. So I'm going to start looking for stuff under $120 a square foot. We may start seeing that. I don't know by the time my next update video if we'll see that. I don't think, maybe we will. I don't know if we will, but I definitely think the interest rates are going to continue to skyrocket. I also think that we're in recession right now. But you guys, I don't have a crystal ball. We may not be in recession right now, but we did have a first quarter of negative GDP. I think we're going to have a second quarter negative GDP. But I could be wrong. I don't think I am. But I think it's interesting to note what the Treasury bonds are doing right now, okay? So I'm going to pull that up right now for us to just end this video out looking at the Treasury. Okay, take a look at this, guys. And this is as of today, the 16th at 1:48 p.m. Eastern time. Now, I want to point out that the 3-year and the 5-year are already higher than the 10-year. So the 3-year, the 5-year is inverted, okay? So that means that these are higher. The short-term borrowing is higher yielding than the 10-year. That's a problem. But the big indicator is the 2-year. We've been keeping our eyes on the 2-year. This has inverted already this year. on my show, I've, at the beginning of this year, I said it's going to invert, and inverted, but then it reversed and it had actually a huge gap. But look at the gap now. The 2-year and the 10-year is only off by 14 basis points. And this actually improved a little bit from yesterday. It was a little bit tighter, I believe, but 14 basis points away from inversion from the 2 and the 10. And you guys, in essence, what that is spelling is we're in some pretty rough shape. Even if we're not in a recession right now, I think that even if the numbers come out and we're not in recession, I think we're still in a recession because I think the inflation numbers are tainting the data. Either way, we are in for some changes. We're in for some tightening. We're in for some pain, but I want to end on this. Yesterday, when Jerome Powell came out after they raised the federal funds rate 75 basis points, he issued a warning to first-time homebuyers, essentially saying, hold up, you may not want to buy right now, first-time homebuyers, because we are in the process of resetting the housing market. They are in the process of reset, right? So, you guys, what does that mean? That's negative equity growth. The Federal Reserve has already said, Jerome Powell has already said, we're in store for some negative equity growth, right? So the things that I am saying, it's based on data. It is based on all these things that I'm seeing, experience, these types of things, right? But at the end of the day, you guys, it is only my opinion. Even though I believe it with all my heart, I'm walking it out myself. I'm putting my money where my mouth is, and I am desperately waiting to buy. I still think the end of this year is going to be some really good buying opportunities, and I definitely think in 2023 there's going to be some tremendous buying opportunities. So if you can wait, then wait. Once again, Brian, thank you for coming to visit me today. I really appreciate that, brother, from the bottom of my heart. Also, Don, thank you. He's a great dude. Hopefully I gave him some new builds that he's going to love. Other than that, guys, if you're out there investing in real estate, I do wish you luck, and I hope you win.